Welcome friends, Asli Bania welcomes you once again. Today we have brought you another very good multi-bagger stock. The stock name is Mishra Dhatu Nigam Limited. Popularly it is known as Midhani. So it is a very unique opportunity in advanced materials, and these materials are used in various applications including space exploration as well. So let's see what this stock holds for all of us. So this is our disclaimer. I am not a SEBI registered analyst, and this report has been prepared only for educational purposes only. If you want to trade in this stock, please take advice from SEBI registered investment advisor. Now coming to Mishra Dhatu Nigam Limited. Mishra Dhatu Nigam, popularly known as Midhani, was established in year 1973, and basically the first production unit of Midhani was commissioned in year 1982. So Midhani has been set up with a view to achieve basically self-reliance in production and supplies of various super alloys and special steels materials to defense, and these are used in various nuclear, aeronautical, and space applications as well. So if you see, these materials were previously imported, and due to various sanctions, sometimes these materials were not available to Indian companies. So that's why Indian government set up Midhani so that these materials can be produced in the country as well. So the product categories basically are in defense, space, and energy. And the client distribution of Midhani, the production capacity is around 83,500 metric tons of advanced material. So 50% of it goes to aerospace, 22% to defense, and 11% to industrial turbines, and 9% to oil and gas sector. So the 50% to aerospace which you are seeing, it does include the space sector as well. The now Coming on to expansion facilities, the company is setting up two additional manufacturing facilities in addition to Hyderabad facility. One is the Rohtak facility, which was about to start production by end of 2019, and this will meet the bulletproof armor project which the company has got. Then there is another JV for Nellore. So company is setting up another plant at Nellore, which will take couple of years to set up, and this is going to be set up with Nalco for high-end aluminium alloys which are currently being imported. So no, there is no other competitor of Midhani in India. So everything, if you want to buy except Midhani, you have to import it. Now coming to company's financial numbers, if you see in the last 4 years, the company has increased the top line by almost 100%. The net profit of the company has also increased to almost three times. And if you see, the company is almost on the verge of becoming debt free. The company is paying back its debts. Now coming to quarterly numbers, if you see, the quarterly numbers are improving a lot. And if you see, even the margin profile of the company, the margin has increased in last few quarters as well. And whereas the if you see the interest burden, so it is almost going to be debt free. The other important part is the tax rate, which is a little bit on the higher side, and company is yet to move on the lower tax rate, which will aid the net profit numbers and EPS as well in the incoming quarters. Let's see the cash flow. The company shows a very good cash flow, positive cash flow from the operating activities, and the cash thus generated is used in investing in new plants. So like they opened a Rohtak plant almost in last quarter, and now they are working for other activities as well. And from this cash flow, they are returning debt as well. And Midhani is almost getting to debt free. The only thing is if they have to take new debt for new plants, so that is another thing. Otherwise, the company can become a debt free. Now coming to expansion strategy of the company. So as we have already discussed, the company started a new bulletproof armor production facility in the last quarter of 2019 at Rohtak, Haryana. Then the company is also exploring a JV with Nalco to for an aluminium alloy plant to manufacture high-end aluminium sheets. So they have acquired the land 110 acres, and EPC activities have been initiated for plant construction. Now that the company is also exploring tungsten and tungsten carbide manufacturing plant. Basically, it will be for defense application. The company plans to manufacture around 500 metric ton of tungsten powder, which is currently all imported. So basically, the pre-feasibility report is under progress, and PMC has been awarded. So EPC will be awarded after completion of pre-feasibility report. So this plant is basically a few years away, because now only the pre-feasibility report is being done. Then there is another thing. The company wants to manufacture carbon fiber pre-packs. So company has signed a MOU with National Aerospace Laboratory in India for development of aero quality carbon fibers. Company is also planning to set up metal powder production unit capable of various special alloys like titanium and titanium alloys, nickel alloys, and refractory metals for aerospace and biomedical sectors. The company is also plan exploring the feasibility of production of cobalt in India using secondary sources, cobalt hydroxide, internal plant reverts. So this company plans to set up a cobalt recovery plant through public-private partnership. So basically, if you see, the company is exploring a lot, and within the next few years, if the company is successful in setting up all these plants, the company top line and bottom line will increase a lot due to these expansions. The the other important thing is the company is also exploring the possibility of manufacturing and supply of helical compression springs for supply to railways. Um, Basically, if this happens, because it is a very early stage, and if this happen and company goes in this direction, then it can bring in big orders for the company, and the top line of the company will increase a lot. Now coming to pros and cons of the company, the promoter holding of the company in Midhani is around 74%, 13.3% is with mutual funds, and 5.26% is with insurance company. So basically the general public holding is around 5%. Company regularly pays dividend for last 4 years, and the current dividend yield is around 1.42%. The open order book position is around 1850 crores, which is sufficient for almost 2 or 2.5 years. The company plans to diversify in new markets of basically oil and gas, mining, power, railways, and chemicals and fertilizers. And all the products which company will be manufacturing will be an import substitution, which will save us critical foreign exchange as well. The cons is the basically the raw materials, the volatile nature of their prices, and non-availability of various raw materials coupled with exchange rate fluctuation can adversely affect the company's competitive edge, because the prices are fixed, and in turn if raw material prices change or there is a change in exchange rate, that company can be affected. Now coming to our final review for Midhani for 2020. So Midhani is available at CMP of 163 rupees, PE of 19.6, and market cap of 3064 crores. The company is capable of manufacturing advanced material, and demand for these advanced material is increasing a lot in India. Under Made in India initiative has resulted in very good opportunities for company in space and defense sector. So, and the other point is the company ISRO space budget is growing at a 15% CAGR, and the company is also diversifying it from ISRO. So it is not completely dependent on ISRO. It is diversifying into various other private industries as well. The company has not taken the benefit of reduced corporate tax rate, but just a week back when the results were announced, it looks like the company has taken the benefit of reduced corporate tax rate, and that has resulted in huge net profit numbers for the company. This is a very niche product manufacturing company, and the company has no competitor in India. So if you don't buy it from Midhani, then you have to import the materials. That is the only option left with the company. Though in our view, the company is expected to increase the revenue due to various several expansion initiatives, and may post revenues of around 1450 crores, net profit of 292 crores, and EPS of 15.5 by year 2024. So our final verdict, Midhani is at very interesting valuation. Price may go up to rupees 310 based on PE of 20. Approximately 2x opportunity from 4 years perspective. This is a low risk stock, and there is uh, like it is a government company, and there is always a chance that there is a delays in capacity expansion. However, if the company expands as it is projected, then we expect that the price may go up further than our price. There is also a chance of PE expansion because there is no competitor of the company, and the revenue of the company is very stable due to various orders company is getting. So if the expansion go as planned, then there is a chance of PE expansion as well. So thank you, friend. This was all from our side this week. And if you liked our video, you can subscribe to our channel by clicking on the link below the blue colored arrow. Thank you, and thank you for listening to me, and see you next time.